Hey there, Trader Tim from eminimine.com coming to you on this Monday, February 24th with a market analysis for the E-mini S&P, and we'll also talk some swing trades. If you've been over to eminimine.com in the last 24 hours, you'll notice a fresh new homepage that was just rolled out. I'm glad to finally kind of get things freshened up here for the new year. In terms of trades, for today, when we have these big down moves like this, or sometimes they're giant gap ups, typically it's more a gap down that you would see. It doesn't necessarily equate to a host of good trading opportunities on the day itself. What I've found is that on these days, I tend to add to longer term positions and stuff in if the gap down or the pullback is big enough, I'll add to retirement accounts and kind of those long only positions. I also find that sometimes I'll get a lot of long swing trade setups happening around this time where some of the individual stocks that might be pretty strong in their own right are just getting pulled down with the broader market, and they end up producing some nice setups coming out of the um, initial, in this case, gap down. And then on the day trading side, the days like the next this week, next 4 days, and then typically next week as well, we should see some pretty good trading opportunities. May not be tomorrow if it ends up being an inside day, but the range from today is big enough that if we do have an inside day tomorrow, meaning if we stick within today's high and low price, that we should be able to have a big enough range where we can fade some highs and buy some lows, kind of look at the nicey tick, shorting in high ticks and buying in low ticks. So it doesn't necessarily mean that if we go into an inside day tomorrow that it's a complete no trade day. But today I chose not to take any trades. Um, we get on these big gaps. A lot of times there's so much emotion and panic that sometimes the chart's not quite as technical. You'll notice here on my daily chart a couple of things. First thing that I have is I drew up this retracement, and I drew this up after the fact. I didn't have this up on Friday, but I put it here to give us a target if we do rally from here. And the first thing we would need to do is break today's high to start filling this gap. And then if I look at where the full halfway back short is, the opposing setup, this is if the long is the setup that traded first, then the opposing setup is going to be the setup in the opposite direction. So in this case, the short, and that's conveniently just above 3,300. So it I mean, we could easily gap up tomorrow 500 points or gap up to 3,300 and be right at that short. We closed a couple of gaps today down in this area that were unfilled from about a month or so ago. And then we also, the low here, a 1275, 32.1275. Today we came to 32.1375. So we did find some good support. We also had lows back here. This dash line is actually, I left it on here. It's the negative 23%. I'll go to a weekly chart from the 23.75 way down here. That's just kind of our target reference line. And I like keeping it up just to kind of get a sense of how far we've gone and how much further beyond the negative 23% we've gone. So the 50% using this swing low could easily change if if we gap down tomorrow or if we move lower. I'd be fine coming down to the swing low and drawing the highs like this. But as of right now, I'm just kind of using it as a reference point. On the weekly chart, the candles, not don't give us a whole lot. This bearish candle from last week, but really it's the gap down that made the move. Like today's price action is really minuscule compared to the actual gap that took place. But with all of the coronavirus talk and some of these earnings announcements that are, uh, even CEOs and things forecasting like the next quarter's earnings and just some of the hits that these businesses and I know personally some businesses who are talking about shipments delayed and back ordered product. Things are hitting the bottom line in maybe some ways that people thought would kind of be brushed off or would quickly subside. And I think it is having a bigger impact, and we'll start to see some more of that impact over the next couple of months. But for the week ahead, um, I'm looking forward to some good trading opportunities. If we switch gears to swing trading, I always find it very interesting how last week I got kicked out of Microsoft, and that was my long position up here on the 20th when we moved below the high bar, and you know, that's kind of the beauty of trading individual stocks is that you get a little bit of a glimpse of, you know, what does your basket or your portfolio look like? And this was my only long that I had. I'd been having a lot of short positions. I've had maybe at least a half dozen this year, maybe even closer to 8 or 9. And I still have BNFT, and that one is just pretty much been on a straight 45-degree angle all the way down. And so, when I see, hey, the market is in a strong uptrend, but I'm getting a lot of short signals, I'm getting a lot of short setups. I actually have more short trades on than long trades. Um, I kind of let the market dictate where where it's going to go can be dictated by the positions that I have on. So rather than me try and say, express my opinion on the market and say, well, we have to go up, so I'm only going to put on long positions. If I'm open and willing to just place the trades that sort of present themselves, then you get in, situations like this where you have a gap down, you're out of your longs, and you have shorts, and you're, sitting pretty. So that's all I've got for you today. Tomorrow we'll be doing a live trading session, so you can tune into that over at eminimind.com/VIP. And if you have questions, shoot them in the comments below. Happy to answer those. Thanks, everyone, and have a great week.